Hi, I'm Victor. In this video, I'm going to cover CVS. This is the big pharmacy company that also has a healthcare company within it. I've been an owner of CVS for a few years, and I've been a satisfied investor. The stock has gone up, and they've paid a dividend along the way. It's a really good industry to be in 2022. High growth stocks are being punished, but healthcare and specifically CVS has been doing quite well. I'd like to tell you about the company, tell you where their stock's been trading, my valuation of the company, and hopefully you find that interesting. What I'm looking for is I'm looking for stocks that are at a discount. That way I could make money on the price of that stock over time. I want a company that's well operated and is also performing very well. And I want to know that it's the right time to buy. Sometimes, you have a great company, but you have to wait for the right time to buy. Let's take a look at CVS and see how they score. So today is May 4th, 2022, and CVS announced their earnings this morning. Their revenue grew quite well. They grew 11% top line, just great performance because they've been growing, year after year. Really nice to see that. They also generated more cash flow than I expected, and I think the market expected. You're seeing their stock really rally today, I think, for those two reasons. They also provided good guidance where they're going to be improving their earnings per share, and their cash flow from operations is quite high this year. Looking at the stock price for CVS over the last 5 years, it's gone up 18%. It's up a little bit more than at this point. This is at the very early hours of today, but since then it's gone up probably 3%. So you probably did about 20% if you owned for the last 5 years. But looking at the 1 year chart, they are up 18%. And again, this is while the S&P is down more than 13%. It's a time when, a lot of stocks are way down, but CVS has really performed well. It's also provided some good points to really buy on dips. For example, not too long ago, you could have bought at a really nice dip, which I did. I like to track the companies I really believe in, and then buy when these dips happen, so I can, cost average my investment, but also take advantage of market fluctuations on really good companies that I believe in. I believe that CVS currently is discounted. Their stock price is discounted by 49%. Let me tell you why. I've taken a conservative approach at looking. I use free cash flows as the metric to value a company. And I want to know over the next 20 years what their cash flows look like of free cash. And I'm going to grow those cash flows starting with the first completed year, which was 2021, and grow it at a growth rate of 9%, which is lower than what they have historically grown at. And then first 5 years at 9%. And then after that, just a very conservative 2%. So this is a conservative model, in my opinion. And if I take a 9% discount rate used to calculate the net present value of the cash flows for 20 years, I get a value of the company of $204 billion, almost $205 billion. But the market cap is $126 billion. Therefore, it provides a nice 49% discount. Looking at it on a per share basis, the value per share that I calculate is $155, but the stock price is only $104 per share. So it's a nice discount in a stock that's been really performing well, a good industry to be in here in 2022. So CVS Performance has been really good. Year over year growth has been 8.59%. If you look at a full year growth rate, the free cash flow has been really high at $15.7 billion. And they've paid a dividend of 2.29. Keep in mind that the stock price has been going up over time. So that dividend is somewhat depressed a little bit. It's not the biggest dividend rate you've ever seen, but it's because a stockholder is being rewarded with the price going up, which is nice. Free cash flow yield is 12%. So if you take the free cash flow divided by the market cap, you get 12%, which is really good. PE 16, nice and healthy PE. Forward guidance, Q1 grew at 11%, off to a very good start. They raised their earnings per share guidance, and they guided for a 23% increase in cash flow from operations. So just a really good start. Should be a good 2022. This is a stable company that pays a dividend. Inflation will lift revenue just because inflation's hitting all spots, especially all the consumables that CVS sells in their stores. So I think their revenue is going to go up just as a direct correlation to inflation. There's some moderate upside in the stock. I always temper my expectations on a stock that's already gone up. I think some of the gains are behind us, and I think there's still some upside left, especially if you pick the right spots to buy on dips. And you'll be paid a dividend along the way, which is nice. So looking at the scorecard for CVS, you can get a discount on the stock because it's just a really good performing stock and cash flow is so good. So really good discount. You can make the entry point even better if you buy on a dip. Second, the company is very well operated, performing great. So this is a very well-run company. It's a very big operation, but very well run with a very good strategy for the future. And if you pick the right time on dips, it's a good time to buy. So this video is for entertainment purposes only. I'm not recommending you buy CVS stock or any other stock or security. I like to share my experience as an investor in CVS, and I hope you found it interesting. Thank you for watching my video. I really appreciate it. I hope you found it interesting. Please hit the like button if you liked the content you saw. And if you'd like to see some more, consider subscribing and hit that bell to be notified when I release a new video. Thanks again for watching, and good luck investing in 2022.